Hey guys, it's that Dividend guy here, and I want to apologize. I did miss yesterday. I had a lot of stuff going on. I had to watch my niece, and just everything kind of got in the way. But I was up overall for yesterday. But today, as you can see, that is not the case. I'm actually down for the day, which is fine. But I believe I am up for the week, 60 bucks. Up for the month, $600. Up for 3 months at 373. Up for the year, 81 and up for the all-time portfolio history, up about 0.83% or $120. So not doing too terrible. But I wanted to go over a little bit of my moves for the portfolio. As you can see, I did cut two stocks, got rid of Macy's, and I got rid of SKT because I wasn't as confident in them as I thought I was. So that's really important. And I also watched a dividend investor, and he made a good point in that you should have a pretty finite amount of stocks. You should have a pretty concentrated portfolio. I'm not saying hold three stocks, but what I am saying is if you hold 50 stocks, if you're going to be that diversified, you should just buy the S&P 500. For me personally, the biggest amount of stocks that I probably hold is like maybe 15 to 18. Right now, I'm probably sitting at 12 or 13, combining my current holdings with my watch list, just because I totally agree. He pointed out that you're not going to love the 50th stock as much as you love the first three that you picked. I get that there's diversification, but if you want diversification, just have the S&P 500 in one of your holdings. Then you're diversified, can focus on your individual stocks, right? So for me personally, the magic number is 10 to 15. And right now I think I'm at 13, so I could add two more, which they would probably be 3M and probably American States Water for the two that I'd add. So, but let's go over how my stock market portfolio is doing. Just wanted to throw that in there because I thought it was a nice tidbit. Uh, but Altria is down, and like I said, I did sell Macy's and I sold SKT, and with that money, I put it into Altria Group. So, guys, what is the goal for this portfolio? What is the goal for every dividend investor? What I believe should be the goal. I believe every investor should have the tunnel vision goal to be self-efficient in their stocks. And what I mean by that is when Altria pays you, or when AT&T pays you for the month, or when ExxonMobil pays me, whatever, when a stock pays you, your goal as an investor should be to be financially stable in that stock, to be able to have enough shares in that stock to reinvest it into the stock. So when I get paid by Altria Group, I want to be paid $42 to $43 because the stock's at 40 bucks right now, right? So you want to be able to forever be able to buy that stock as long as it's a decent price. You know what I mean? Like, so you figure out the price that you want to pay, then you buy that amount of shares, you figure out how much you think the stock is worth, and then you buy that amount of shares, can always reinvest it as long as it's at that price. And then if you don't, if let's say the stock's overpriced, like I think AT&T is, even though its PE is at 15, so PE ratio is healthy, but to me, I'm up $6, so I refuse to buy it at 37. Then you can put that AT&T money, that 31.50 I have, towards something like maybe another ExxonMobil when I get paid that month, or go back and invest it into Altria. It gives you freedom, but what your goal should be, and this is the point I'm trying to make, if you're self-efficient in your stocks to buy a share with every stock that you own, even if the stock isn't priced for you to buy it, then your investing can be automated. You don't have to watch it. It's like Bill Gates and Microsoft, or Steve Jobs and Apple. You don't need to work on it anymore. It builds itself. That should be your goal. So let's say I get paid by Altria next month on the 15th. I'm going to set, when Altria gives me my dividend payments next month, I'm going to set up an automated dividend reinvestment, meaning that I'm going to buy 2 shares of Altria when I get paid. Every time Altria pays me, if it's at the $40 to $42 range, I will automatically buy Altria. Same thing for AT&T. Right now, it wouldn't buy a share, so the dividends would stay in there, and that's totally fine. But I'm going to automate it when I get paid by AT&T the next time I get paid, to buy it at $31.50 or whatever, $31 a share, because I generally keep $5 to $10 in my buying power just in case for fluctuation of prices and stuff. So I'd have that covered. But again, I'd automate AT&T when it pays me, so that when I get $31.50 in the stocks at the price that I have set it at, I get an automatic buy. Same thing with ExxonMobil and Target and WA. That's the goal for every dividend investor, is to build a portfolio that is self-efficient, that builds without you having to monitor it all the time. That's how you get rich, by setting your prices, knowing exactly what your intrinsic value of your stocks are, figuring that out, having enough money in the stock to reinvest it every month at the price that you set. So you know you're getting a good deal. You don't have to worry about market fluctuation or anything like that. It's completely automated. It'll buy it for you. And then you don't have to run it anymore. It's like I said, it's like a franchise you don't have to be at. Or Bill Gates with Microsoft. He cares about the company, I'm sure, but he's not there day to day making sure that it's running. He's not running his own company anymore. Somebody else is. Or it's automating itself. That's exactly what you want to do. You want to be able to make your dividend portfolio just like a business and automate it and make sure that it runs itself without you having to do anything. So that's my goal. And honestly, I'm super excited. I wish that I had a stock that was automated for 36912, because I have it with Altria. I have it with AT&T when it's priced at what I think it's valued at, and it's automated for AbbVie as well. So I have one for the first month of the year, I have two for the second month of the year, and I don't have any for the third month of the year. So my new goal for this portfolio is to get either ExxonMobil or Target completely self-efficient. So when I get paid dividends and I have the price set at my average price or whatever, or the price I feel Target or ExxonMobil is worth, then I'll buy it. And that's the goal. So as dividend investors, keep in mind the end goal is to build your wealth, but even better is to build your wealth automatically without you having to worry about it. That's how you're going to get rich. So keep in mind, pick your favorite 10 to 15 stocks, whatever. Pick your top three on alternating months and focus on those for a while. Get those dividends efficient to the point that you can buy another share, or you can buy another share of another company, whatever. Do what you want to your dividends. I'm just saying the end goal for every dividend investor should be to be able to buy more shares of their company. Period. End of story. And for me, that's already a reality, so that's great. So I'm up. I'm down according to the market, but I'm technically up because Altria is down 480. But between AT&T and AbbVie and Target, I'm actually up. So again, not worried about volatility. It's a great opportunity to buy stocks, which is exactly what I did. I sold out of two of the positions that I was iffy on, which is what you should do as an investor. You should always go through your holdings. If there's something that you feel iffy about, or that you didn't research enough, or sell out of it. It's fine, not a big deal. Sell it at a profit and put that money into something that you're more comfortable with holding. So just little tidbits there. I just kind of wanted to share my philosophy and what my goals are really for this portfolio, because it's okay to show you exactly what it's doing and kind of explain my moves, but it's really important for you guys to know what my end goal is, and that is to be completely self-efficient in the stock market and to one day be able to not care at all about what it's doing, and not have to watch it and have it self-automated to do exactly what I want, so I can not focus on it and technically build a business and have a business be self-efficient is my goal. So thank you guys for watching. It's been that dividend guy here. Remember to hit that red subscribe button. But when you hit that subscribe button, make sure that you hit the bell icon, because it's very important. Because I don't want you guys to miss any of this information, any of my updates on my portfolio, because I know people love these. I love doing it. It's great. But the end goal, guys, is to have a dividend portfolio that you can live off of. And the best way to do that is to automate your investments and have enough in dividend stocks to buy another share so that it's constantly growing without you having to nurture it, right? So, yeah, thank you guys for watching. I'll see you guys in the next one. Remember, stay strong. Don't let the market, freak you out too much, and keep your heads up, okay? Thank you guys for watching.